has the virus, or their children, school or daycare centers are closed up as a result of the virus. Um, if individuals are required to stay home because their businesses have been locked down, all of these are various provisions that require or open up to the benefits for people to apply for this assistance under unemployment. It also provides an additional $600 per week per employee, a bond agreement between the federal government and the states to extend, and also expands it an additional 13 weeks, which will run from January the 17th of this year through December the 31st. But the additional payments sunset on July the 31st. And this compensation is 100% federally backed or covered by the federal government. The eligibility does end when an individual does return back to work, and the benefits are provided through state unemployment insurance offices. Now, there are a number of provisions, some for all businesses, some for larger employers, and those which we'll talk mostly about are small businesses, self-employed, independent contractors, nonprofits, you have it. Some of the provisions regarding all employers are some of the payroll taxes. Businesses and self-employed individuals can delay payroll tax payments. These payments, the employer's share of Social Security tax owed for 2020 can instead be deferred and paid out over the next 2 years. 50% has to be paid by January the 1st, 2000, or I take it back, December 31st, 2001, and the remaining 50% must be paid completed December 31st, 2022. It's also important to remember that those do not apply, though, to employers who have loans that have been forgiven under the Paycheck Protection Program, and I'll talk about that in a minute. Some of the other tax changes: businesses that have net operation losses in a tax year beginning in 2018, 19, or 2020, those losses can now be carried back 5 years, suspended by 80% limitation, and extends to pass-through businesses and sole proprietors as well. It accelerates the recovery of alternative minimum tax credits, and it modifies or increases the limit on business interest to 50% from 30% in 2019 and 2020. Additionally, businesses are eligible for an employee retention tax credit if your business operations were fully or partially suspended due to the COVID-19 shutdown order, or gross receipts declined by more than 50% compared to the same quarter the year prior. Eligible businesses can get refunds, 50% tax credits on wages paid by the employer up to $100,000 per employee. Employers with more than 100 employees, this applies to employees not providing services, and employers with less than 100 employees, it applies to all employees paid during the eligible period. Employers are not eligible if they receive the Paycheck Protection Program loan. As far as mid-sized and larger companies, there's a number of loans and loan guarantees and Federal Reserve credit facility changes and provisions included. It authorized the Federal Reserve to create Main Street lending facilities for small to mid-sized businesses, providing roughly $454 billion in liquidity for loans, loan guarantees, and investments in support of facilities established by the Federal Reserve under the 13.3 authority to support lending to eligible businesses, states, and municipalities. Special programs for the airline industry and critical national security businesses were included. There's a $25 billion loan or loan guarantee for air carriers, $4 billion for the air cargo carriers, and $17 billion for businesses that are in that national security space. This bill does have restrictions on stock buybacks and executive compensation packages. Borrowers are prevented from repurchasing stock or dividend payments while the loan is outstanding, in addition to 1 year after the loan has been paid. Also, any officer or employee whose total compensation exceeded $425,000 in 2019 can receive no pay increase at 2019 levels for a year after the loan has already been paid as well. Now, as far as small businesses, there are a number of things, as I mentioned a moment ago. The most important thing is probably the Paycheck Protection Program. This is the largest section of the CARES Act and is the most important provision for small businesses. This program sets aside roughly $350 billion in government-backed loans for small businesses, self-employed, sole proprietors, freelance workers, gig economy workers, and independent contractors, as well as nonprofits, 501c3s, not sixes, but threes, and is modeled after the existing SBA 7A loan program that many businesses are already well aware of. A business can get 2.5 times the amount of average payroll, or up to $10 million. These loans will be issued by local and national lenders. Currently, the SBA has guarantees with small businesses of about 800 around the country. This bill will vastly expand that to virtually every bank and and credit union to be able to provide these loans, and those will be coming soon. There's also minimal requirements. No personal guarantee or collateral is required for these, and loans convert to grants equal to the amount spent on payroll, rent, interest on mortgage, and utilities for 8 weeks after origination. So in essence, as long as employers continue paying their employees at normal levels during the 8 weeks, and then the amount they spend on payroll and the other items, then that portion of the loan will be forgiven. However, loan forgiveness is reduced proportionally if the employer reduces the number of full-time employees or reduces wages by more than 25%. Employers can avoid a reduction in forgiveness if they bring back employees and restore their wages generally within the first 30 days after the legislation has been signed, which has already taken place, and maintain that through June the 30th. Some of the other provisions I want to talk about is, a few other things. One being, and I mentioned this earlier, particularly in how local chambers, those 501c6s, for those nonprofits that are 501c6s, small businesses, and self-employed, there's another loan opportunity, and that's through the Small Business Administration's Economic Injury Disaster Loans Program. This is an existing program that's already been around, but they've expanded it through this legislation. And so any small business or nonprofit with fewer than 500 employees, again, sole proprietors, independent contractors, nonprofits that are 501c6s are eligible for this. So up to $2 million working capital loan, up to a 30-year term. Payments are deferred for up to 1 year. Loans are based on credit score and not tax returns, and no tax returns are required. Up to $200,000 without personal guarantee, and no collateral for $25,000 or less. General security interest instead of real estate for larger loans. And then there's a $10,000 emergency cash grant that is given to an applicant within the first 3 days that is paid out to them, and that is not required to be repaid. This does interact with the Paycheck Protection Program. Businesses can have both the PPP and the economic injury disaster loans. However, those payments for those funds have to be for separate things. And if you got the $10,000 cash grant up front, then that would be rolled into, and other loans of that loan would be rolled into the PPP one. And Allison can probably clarify that a lot better in a minute. Just a couple more things I'll mention, and I'll turn it over to her to kind of cover what I've missed and so forth, is regarding leave, paid leave and family medical leave. Employers with less than 500 employees is required to pay 10 days of paid sick leave if leave is related to the COVID-19. Sick leave can be taken when ill or quarantined to exposure, or to take care of a sick family member or child who is at home. The paid leave is at regular rate with a maximum rate of $511 per day. If self taking care of yourself, but it's down to 2/3 rate and a maximum of $200 per day if you're taking care of another family member. Payment up to the maximum is reimbursed by the federal government, and leave is an addition to any other leave an employer already provides. Businesses with less than 50 employees may be exempted from the provided leave related to caring for a child whose school is closed down, and a few others. And then paid sick leave is not available if an employee can telework. And then lastly, I'll just kind of mention the family medical leave. Employers, again, with less than 500 are required to provide up to 10 weeks of paid family medical leave if an employee needs to take care of a child due to school or daycare being closed because of the COVID-19. Leave is paid at 2/3 regular rate at a maximum of $200 a day and at $10,000 in aggregate. And the medical leave is in addition to any leave an employer provides. Payments for family medical leave will be reimbursed by the federal government up to the maximum amount I mentioned a moment ago. And then businesses with less than 50 employees, again, may be exempted from providing this to their employees whose children are out home because of school being closed. And again, lastly, the paid leave is not available for any employees who can telework as well. Robert, you had mentioned a number of resources you'll be getting out. Thank you for doing that. Happy to try to answer any questions we can. I see a couple coming up, but let me turn it over to Allison to kind of clarify maybe a few things, but also add a few things that I might have missed. Allison?
Thank you, Maureen. Thank you, everyone, for having me. I appreciate you taking the time. I think, Maureen, you covered it pretty well. I was kind of trying to answer some of the questions that were coming in as you were talking. So maybe it'd be more helpful to just kind of start going through those, so we make sure we're addressing everything folks want to know.
Sure. Robert, do you or Jason want to kind of go through the questions and ask any that maybe that aren't too repetitive or kind of facilitate that?
Sure. We can happily jump into some of these questions here. I know that there have been several questions from many of you that have submitted them earlier today. And I know some of those questions have just been answered by some of you, but let's go with the one question that I mentioned to both you guys that we keep hearing over and over again. And that is for employers who are trying to make determinations if they are going to put employees on furlough, and they are also going to apply for these federal stimulus dollars. What is that time period that they can furlough those employees and receive the funds and then bring those employees back at that full 100%, and the loan will be then forgiven? I mean, I think that's the biggest question that a lot of folks are facing, knowing that there is federal dollars that will be available in the coming weeks, but it is in coming weeks, and folks are dealing with paying rent tomorrow and bills that are piling up tomorrow, and with no revenues, they're making those challenging decisions right now. So if you can kind of walk through that in that process, if someone is going through that decision, what would that might look like, and what would work or may work for them?
So there's a couple of things at play here. As Maureen mentioned, if you're applying for the payroll protection program, in order to have the full loan forgiveness, you can't have a reduction in workforce, and that includes not furloughing employees, because that would be considered having a reduction in workforce. If you've already done a reduction in workforce, you have 30 days from when the bill was signed into law to get those employees back on payroll. That's the end of April, so it has to happen fairly quickly because the bill was signed into law on March 27th. Now, if somebody is looking to, for example, apply for a loan under the EIDLs, the way those EIDLs work is that if you need an emergency infusion of cash, you can get $10,000 of an emergency grant within 3 days of having applied for that loan. That's the loan that you're applying for through the Small Business Administration. You can't use the, as Maura mentioned, you can't use the EIDLs for the same purposes that you use the payroll protection funds, but you can have them overlapping. So as long as you're using those, you can have them at the same time. So as long as you are using those funds for different purposes, you can actually get that $10,000 of infusion of cash fairly quickly. And that is completely forgiven. And it's completely forgiven even if you don't actually get approved for the larger EIDL loan. Now, if you do get approved for to be part of the payroll protection program, that $10,000 of emergency grant forgiveness is actually forgiven under the PPP. So they interact with each other. I don't know if that helps with the furlough question. And furloughed employees obviously are eligible for UI. So there's that side of it.
Sorry, we're working on the microphones here and muting, so you don't hear any background noise. So I see. I mean, there's lots of questions coming in. So another question was: we reduce the hours of the employees due to less sales. Can we still qualify for the paycheck protection loan? Similar, answer to that question.
Yeah, it's a similar answer, right? So if you're providing less hours, you're doing a reduction in workforce. You're probably doing a reduction in salaries. So whatever you're reducing, think of it this way. The payroll protection program, the whole purpose of it is to try to encourage employers and give small employers the ability to keep their workforce at their current payroll, at their current salaries for as long as possible without destroying the business. So the idea is if you're reducing hours, you're probably reducing salaries. If you reduce them more than 25%, then you end up having problems with how much money you can actually have forgiven, because you're now doing exactly what they're trying to prevent to having be done by having the program.
Okay. There was another question. I don't know if everyone was able to see it. That I know you answered the question there, but I just wanted to reiterate on the phone. The question was the specific time period to determine the average payroll. That was a question that you all had brought up about 2.5 times the payroll. And your answer was it would be over the last 12 months. What is that average payroll existing on a month-to-month basis? And that's what helps determine that 2.5 times average when you're trying to determine the amount of funds that you could apply for.
And that's what we expect is going to happen from the federal government. We're waiting for regulations to come out. We're expecting them to come out on Friday. That seems to be where things are trending. So don't hold me to that. I saw that there were some concerns about that because it includes Q1 of 2020. Don't hold me to that. They may work that out, but just kind of giving you an idea of what we think we're going to see on Friday.
Okay, good.
One other that we've gotten a couple times is you mentioned that now there's going to be an explosion of banks and credit unions offering access to these loans. Whenever we go for a loan for a house or a car, we typically like to shop between banks and credit unions to see what rates are. Is there going to be, are the loans going to be different from bank to bank, or can we just go to our favorite bank and apply?
So they might be slightly different in that the lender has the option to determine how long they defer interest and payments and fees. It has to be no less than 6 months and no more than a year, but the lender can determine. And the other thing is that just as in any loan, right? Like you can go in and explain why you want to have your loan. You have your loan application, and there's always somebody who's going to be looking at it to say, well, yes, you meet the requirements. Yes, you don't. You don't meet the requirements. That said, our understanding of this is that people are going to try to be very liberal in making sure that businesses are getting the funds they need to stay open. So.
Great. And Allison, if you have a link that you could put in the chat so that people could have a link to the application for the Paycheck Protection Program, I think that would be helpful too.
So we don't have those yet, and that is something. So the application for the Paycheck Protection Program goes directly through your lender. So you'll need to contact your lender to do that. It's the EIDLs. Those are directly through the Small Business Administration. That link is not live yet, but again, we're expecting that to be live by Friday. I would keep checking this Small Business Administration website, and the U.S. Chamber's website will update saying when it's there, so you could also keep checking our website.
Yeah. So another question was on here, another great question, is the funding going to come on a first come, first served basis? Obviously we know the certain amount of money. So is it basically just, yeah, first come, first serve, and whatever's, if you don't apply early, then there might not be anything left.
I mean, yes, in that it's $349 billion that have been allocated for this, but it's $349 billion that has been allocated, and that's for the PPP loans, and there are caps on all of it, right? Like you're not supposed to, you can't exceed the $10 million in payroll costs, and like there are caps, so to try to make sure that that there's enough funds to go around.
Okay.
I think a good question that I've seen in here a couple of times is if people chose to travel and now are self-isolating or are self-isolating because of a family member, are these small businesses required to pay them leave during those chosen self-isolation times?
Yeah, so this is where things get a little complicated, in that the easy answer to that question is yes, you are, but it's not the same way, right? So if the person is self-isolating because of a government quarantine, because a health provider has told them that they need to self-quarantine, or because they're experiencing COVID-19 symptoms and are seeking medical attention, those people have the 10 days of sick leave at their regular rate. If they're caring for somebody else who is subject to a quarantine, if they're caring for their child because schools are closed or there's a caregiver that can't take care of them, or if they're experiencing, and this is the way the law says it, if they're experiencing substantially similar conditions as outlined by the U.S. Secretary of Health and Human Services, basically if you're experiencing symptoms, but you're not seeking medical diagnosis, so you want to, self-quarantine, then you get reimbursed at 2/3 the regular rate.
Great. We've got
I got another question here that just to get clarification. So when we speak of small businesses, and let's just take for example like a barber shop or a beauty salon, who applies? The shop owner or the barber or potentially person working at the hair salon? As in some situations they rent from the owner of that location. So are they then considered a small business owner and they can apply, or does the overall shop owner then apply?
I mean, it depends on how they're filing their taxes, right? If they're independent and they're renting the space, then the individual stylist or barber would be the ones who apply individually. If that said, that doesn't mean that the salon owner can't also apply, right? Because there are other issues and questions about them being able to pay their own rent and all of that. It just means that when they're calculating the salaries, they're not calculating the salaries for all of the stylists or the barbers, because they're not the ones who are having that salon owner is not paying their payroll. They're getting their payroll independently.
They would act as an independent contractor, I guess, for that salon or barber shop. But the barber shop owner itself can file separately for their own sake, and based upon their tax returns, as Allison said, and I guess their business license, how they operate.
Okay.
I want to clarify something because Nicole asked a question, and I just want to clarify something. With the PPP, even though the loan is forgiven within 8 weeks, technically, in order to be compliant with the loan, you have to, so the whole loan is not forgiven in 8 weeks. And this is part of where things get confusing, right? It is simply what is forgiven at the end of the 8 weeks is the amount of money that you have spent on the various things that are allowed to be used for the loan. So payroll, rent, utilities, that sort of thing. However, you may still have more left on your loan to pay, and then it's subject to the regular conditions of the loan. However, you still cannot have a reduction in workforce before June 30th in order for that payroll forgiveness to still be, applicable. Now, I don't know how that it quite works in terms of the lender coming back to you and saying, hey, we now know you have a reduction in workforce, and so we want the money back. But you have to remember, you're working with your lender through this whole thing, so they are going to know that information. And so you cannot have the reduction in payroll or workforce before June 30th and still maintain that forgiveness. I hope that answered your question, Nicole, because I think that was the question you were asking.
So there's another question here that was actually a really good question. What if we were not in business for a full year? Do they estimate 12 months on payroll for the time open, or the less period of time, say your new small business opened up?
There are a couple of different ways that and more, maybe you have a better answer. You look like you were going to answer.
I was just going to say, isn't it if they were in business on or before February the 15th, they're eligible?
Okay.
Oh, yes. And the question becomes about calculating it. Yes.
Another question just came in. Please repeat what expenses are considered eligible for paying through the PPE in the 8 weeks.
Yep. So the PPP is pretty limited in that it's retaining workers, maintaining payroll, making mortgage or lease payments, and paying utilities.
And again, if you were to apply and be granted both a PPP loan and then through your lender and then through the SBA, the EIDL loan, you cannot use those monies for the same expenses. They've got to be separate.
However, you can use them for you can use the EIZL loan, the EIDL loan, for something like increased costs due to supply chain disruption because of COVID-19, or repaying obligations that couldn't be met due to revenue losses because of COVID-19. So there's still COVID-19 related reasons that you can use the EIDL loan that are different than the PPP loan. And if you only are able to get the EIDL loan and not the PPP loan, you can then use the EIDL loan for those other things.
Allison, I'm going to ask a question of you, just based upon what you just said. Are there more, as you said, the PPP loans are a little bit more limited in the payroll, interest on mortgage, rent, and utilities. Is the EIDL loans then, as you said, they're for supply chain disruption in your business and other things. So they're a little bit more, there's a little bit more opening to the expenses that those can be used for. Is that correct?
Yes, that's a lot more flexible. And those are conversations that you end up having with the SBA loan officer when they call and talk with you about the loan itself.
Thank you.
So I guess another question that is not on here, but just I know you explained it. So it's Friday. This Friday, is that the estimated time frame that we're going to find out all of the rules and regulations, and of course the banks that then will be eligible to provide these SBA loans and all the other assistance? Is that what you're hearing from Washington, and is that what is being messaged down?
That's our expectation. We got that information this morning or late yesterday from the Treasury Department that that's what they're hoping to have. Allison, is that correct?
That's still what we're hearing.
Yeah.
I think, Rebecca, are you getting any other questions you're seeing on there? I was trying to look through.
Yeah, I see a couple. I think one of the questions that might apply to a few of the bigger businesses on this call is if they're exceeding 100 million annually, included in covered payroll, or are they excluded? And what are the payroll costs that would be covered? What about health insurance premiums?
So the health insurance premiums are part of the payroll.
100,000. I misread it. Sorry.
Yeah. So your payroll, what the employer provides in terms of health insurance is part of the payroll expenses. And then the salary, anything that is above that 10 million mark then can't be included in the calculations. So I'm not sure if that answers the question.
Rebecca, was your question for an employer with 100,000 or 100 million?
Yeah, they clarified. They said it's 100,000.
100,000.
Yeah.
So the $100,000 cap, and maybe this is where the confusion is coming in. The $100,000 cap is on an individual's salary. So you cannot be taking into account individual salaries over that 100,000 mark. And maybe that's what's being referred to. And we didn't, to be honest, I don't know if either of us talked about that, but that is one of the kind of exclusions in making the determination in the PPP.
The maximum amount of the loan is 2.5 months of regular payroll expenses, and everyone who makes over 100,000 is technically calculated at a cap of 100,000 because that amount over that is not included.
That is correct.
Correct.
Allison, I have another quick question. I'm sorry, I'm kind of asking the question. This is helpful, but if you have a business that has all their employees making over $100,000, is that still the same way? I guess just calculate it based upon 100,000?
Yes.
Across the board? Okay.
Yes.
And there's a question about clarifying the 25% reduction in payroll and still eligible for loan forgiveness. And so as you're looking at that, Allison, if you want to repeat making sure that folks haven't gone below that threshold so that loan is no longer forgiven.
Right. So what happens is after that 25%, if you reduce payroll more than 25%, then the amount of your loan that is forgiven is equally reduced. So it becomes a ratio. So it's not an automatic, you're not forgiven, but you start seeing a reduction in what is forgiven.
Did that answer your question as well, Ruth, that just came in?
I don't know the answer to Ruth's question. That admittedly nobody's asked me that one yet, and so I think I need to do a little more research. I'm sorry, unless you know the answer to whether or not if somebody's taken the employee retention credit and then gets the PPP loan, do they lose the forgiveness? And
I'm not sure about that either.
I think most of the expectation is that because of the timing of when all of this happens and how quickly people are expected to be applying for the PPP loans, that you wouldn't have taken the employee retention credit yet. But I don't know what happens in the case where that may not actually have happened.
There was another question on here, which just to make clarification, and this may be up to the state, and so correct me if I'm wrong, but the question was, if an employee files for unemployment assistance due to reduction in work hours, will they be eligible for the $600 federal benefit that was added on to whatever the state provides? And is there a max amount of hours in order to be eligible for that?
So some of that is dependent upon the state itself, but a reduction in hours is not actually, the reduction in hours is not actually part of what the federal requirements are. The federal requirements are actually pretty specific.
Okay. And we can find out that answer though on the state level, because I know the state will have to make that determination on those numbers, and we'll find out.
And for those employees that want to apply for unemployment, that's at floridajobs.org. That is the website for our Department of Economic Opportunity that allows individuals to apply for that. Right now, it's experiencing, as you would expect, a tremendously high call volume. And so the process there is that if you get someone, great, they can help walk you through the application. If it's busy, the first thing that happens is you get rolled over to a voicemail. And if that fills up, you get a busy signal. They do work not 24/7. They work business hours, but they also work 7 days a week. So for those that are trying to get reemployment assistance or put in their application or have questions about their PIN and getting back into their application, if they're getting a busy signal or they're not able to get through, tell them to try on Saturday or Sunday. That's when call volume's the lowest, and they'll be able to get access to the professionals at the state level that will walk them through their unemployment assistance application.
It looks like Anne had a question about what the requirements are about having to close a business if an employee feels ill. That's not something that's addressed in the federal level, so I would have to defer to you all about what the state is requiring.
Yeah, I don't know yet.
Don't know either, but it's worth us finding out.
If you want to email that to Robert or myself, we'll reach out on the county level and see if we can get an answer on that. Just give us a little more information on your business so that we can ask the appropriate person at the county level and try to get you guys some answers.
This is a good question. For the calculation of the reduction in total payroll, is it 25% in total payroll or 25% per individual? So let's say in total, your payroll, you've reduced 10%. Technically, you would still be eligible for loan forgiveness, but one of the employees was reduced 30%, while the rest were reduced 9 to 10%. Does that make you ineligible because one employee was reduced more than 25%?
I don't know the answer to that.
Yeah, that's a good question.
That's a good question. I don't know the answer to that. We can find out though.
Great.
And to the question about whether if a business is considered essential and they decide to close, can they still get the employee retention credit? So it's more complicated than that, right? Because the question is, what are you doing with those employees when you close? If you have furloughed those employees, then no, because you haven't retained them. If you're continuing to pay them, even though you're closed, then yes, because you've retained them. It doesn't, the essential designation, it doesn't play into this.
We missed a question earlier, and this one might be one of those complicated ones, but it's a business owner that was approaching break even, has gone without a salary for 18 months, but now the business has had to close and revenue is zero. but he still has expenses. He wants to know if he has any hope. That might be a tough one to answer.
I mean, we can't make a judgment as to what the lender would do, but I think it is absolutely worth talking with your local lender to see, because that is exactly right. It's not just the PPP loans are not just to pay salary. They are to pay these other expenses. That is simply how they were calculating what that loan amount should be. There are other ways that the lender can help address that. So I think that it's absolutely worth talking to your lender, but I can't make a determination as to whether or not you would actually then be able to get the money.
Thanks.
And just maybe clarify, couldn't of that $10,000 emergency disaster loan, could they apply? I'm assuming they could apply for that, especially if they're self-employed or sole proprietor. I believe that they can still apply for those funds.
Absolutely.
Correct. Okay.
Thank you for clarifying that.
Yeah.
I think we got everybody's questions, and I know we're getting close to our wrap-up time. But again, if you guys have more questions afterwards, reach out to Robert, Jason, or myself, and we will do our best to get answers as quickly as possible. But also both chambers have COVID-19 landing pages up on our websites for you guys that I know are being updated as quickly as the U.S. Chamber gets us information. So bear with us as we all pass information around and try to get it to you guys.
And I want to thank the U.S. Chamber, Allison and Moore, for participating. And Robert, thank you very much. As business owners, we're all trying to thread the needle. Is what's available? Do I put people on furlough? How much is am I eligible for? And what's that break-even point for my business, knowing what my expenses are and my revenue is? And so a couple of things we heard today as part of a bigger wrap-up is there's two kinds of programs that are available. One is paycheck protection, one is economic injury disaster loan. And that economic injury disaster loan is more for folks who are, it's a little bit more vague about what you can use. And so those who participate in the gig economy, those who are contractors, those who don't really necessarily qualify under the paycheck protection, maybe they're a 501c6 like we are, or maybe they're not in one of the specified industries. You would want to go to that EIDL, that economic injury disaster loan program one. And then by Friday, we should know where we're supposed to go get these monies or apply for these monies. Before, the SBA lenders were kind of limited, but we think that there's going to be a lot more of them that are going to start to do it. So get your applications ready, figure out which of the loans, if not both of them, you may need to apply for. And keep us posted as to how it goes, or if you need any help with any more information about what to do in that regard. And thank you to Robert for helping set all this up. This is fantastic. We really appreciate the Apopka Chamber and their partnership. And so I'll turn it over to Robert and the U.S. Chamber for some more closing remarks.
Well, and thank you very much, Jason. I really do appreciate it. I appreciate your partnership and your leadership. And I'm glad we were able to make this together and make this happen today. I know there's a lot of information that was provided, to each of you. So there may be some additional follow-up questions. Just reach out to either of our teams. We'll be happy to help and assist in any way we can. And if we don't know the answer, we'll direct you to that. I know that we're already working with our local lenders in the Apopka area about, and they're finding the information and trickling down from Washington. So we're going to be prepared as soon as that information gets unveiled to relay that to our membership. And I'm sure Jason will be doing the same. So that way folks know where to go and reach out those direct lenders to get the process rolling as soon as it is available. Because we do know that time is of the essence right now. So we're trying to make sure that we bridge that gap in between. Just so other folks know, I know this is not part of this call, but if you are also in need of other assistance, there still is the Florida Emergency Bridge Loan Program. They are still receiving applications for that until May 8th. And that is for a $50,000 loan towards your business. That is from the state of Florida. That is not from the federal government. But that is available to apply for it right now if you're also seeking some other disaster assistance at this moment in time. But I just want to say thank you again to Moore and to Allison. Thank you so much for the information. We appreciate your support and your partnership with our local chambers. And I'm just going to turn it over to you guys to say your final remarks.
Robert, I just simply say thank you very much for taking the time to provide this opportunity to your members. Thank you for the invitation to join you guys. We appreciate the opportunity to kind of share this information, and more importantly, I'm grateful for Allison joining us as well and providing her insight and guidance as well. So Allison.
No, thank you. I appreciate everyone taking the time, and you know, as there's follow-up questions, please don't hesitate to reach out. Just stay safe and healthy.
Yeah.
Thank you so much. Everyone have a wonderful night. Stay home, and we will try to set something up with more information as it comes. So thanks, everybody.
Thank you.
Thank you very much.